The world doesn't belong to those who watch, but to those who dare to enter the arena. Today, protagonist. Your moment is now.
Day Trading Expo. When I started in this industry 13 years ago, there were no teachers.
Trader. I'm also co-founder of Pristine.com, which today is considered to be the premier educational resource for active self-directed traders. It was formed about 7 years ago in my basement apartment that spans over 62 different countries.
Señor Oliver Velez, bienvenido a Colombia de Noticias Caracol y gracias por estar con nosotros.
Era la falta de entrenamiento y un monto apropiado de capital. Lo que hice fue crear un programa que se llama Trade for Life, que le permite a los corredores tener continuo entrenamiento cada día con fondos que yo proveo.
If you want to buy off the 200, which I strongly suggest, once you get a green bar at or near the 200, there's your buy and there's your explosion.
We're talking about trading tips today with Oliver Velez.
We've experienced obviously one of the most volatile months in years. I don't believe we've experienced this level of volatility since, 2008, 2009.
The greatest event of the trading. Do you feel comfortable with this nickname?
I actually do. That, believe it or not, that name, the Messiah of trading, came by the Dow Jones. Dow Jones calls me the Messiah of trading all the way back in the year 2000.
Mr. Velez has worked 31.
More importantly, lack of the proper amount of capital. My program provides all of those four needs for every single trader.
Live from Orlando, Florida, I'm Adrian Manns for the Money Show Video Network. I'm here today with an old friend of mine, always getting into the business.
I've been training and educating traders since 1994. In 2007, and I was one of the first people in the industry to actually risk my own capital on my students. I've spent the last several years throughout Latin America building a Latin American trading team. And at this particular point, we're about 9,000 traders strong. Wow, worldwide. So, and it's been a long road. It's been busy, but very, very successful.
Traders, let me know. Boom. Let me know, traders. Can you hear me? Can you see me? Am I audible? Let me know. Talk to me. Welcome. Welcome, traders. Can you hear me? Can you see me? This is better, guys. I apologize about that. We were buffering for a bit. I think I got that fixed. But welcome to another master class with Oliver Velez. All right. All right, guys. Happy Saturday. Something went wrong again, guys. Frozen again, buffering again. What's going on? All right, guys, look. I'm going to fix this. Stay right there. Don't go anywhere. I'm going to fix this, okay? What about now, guys? Got me? Got me now? Talk to me. How is this? We're gonna get this fixed. We're gonna get this straight. Good? Am I back? Got it? Just need to hear you. Need to see your comments here. Here we are. All right. All right, we will get this fixed, okay? I think this is it. All right, I think this is it. All right, fantastic. Okay. All right, guys, thank you for your patience with that. Thank you for your patience with that. I'm getting excellent readings here, so I think we're out of the woods. I think we're out of the woods here. Okay. Awesome. Okay. Again, guys. Again. Shoot. All right, guys, I think I'm still with you, but I'm still getting error messages here. Everything's good? It's glitchy. Let's see here. It's poor. Seems better. All right, guys, you let me know. Okay, you let me know. All right, you let me know. All right, guys, look. I have something extraordinarily powerful for you today. That is why I do not want you to go away. Even if we have some issues here, we'll get it straight. But I do not want you to go away. All right? You let me know if it gets glitchy. I still might be able to fix this. All right? Okay. It's good so far. So, I've got something very powerful to share with you. But it's going to come across what I'm going to share with you. 3 things that I promise will guarantee that you completely change the quality of your trading starting today. I guarantee you this. I'm going to share 3 things. These 3 things are actually going to appear as though they're very simple, but I don't want you to confuse the simplicity for lack of power. What I'm going to share with you today are powerful foundational things that's going to make your trading unrecognizable to you, and maybe even as early as starting Monday. All right? So, what I want you to do is I want you to take notes on this session. It's that important. I don't want you forgetting certain things. All right? I am not able to put everything that I'm going to share with you on a slide. So, your note taking is very important. All right? You understand? You guys ready to take some notes on this? A few of you let me know. You're ready to take some notes? You got it? I want you to take notes on this. There will be things that I say that are not on the slides, and I will warn you when I can when something should be written down. Okay? All right? That's how important it is. But you're going to leave this presentation today a very different market participant. I don't care whether you trade stocks, whether you trade options, whether you trade futures, whether you trade cryptocurrency. I don't care. The item that you trade does not matter. What I'm going to share with you today is applicable across all markets. What I'm going to share with you today is applicable across all time frames as well, right? So it doesn't matter whether you're a swing trader or whether you're a long-term trader. I will be speaking more directly to those who are trading for a living or wanting to trade for a living, but it is applicable across all time frames as well. All right? All right, so get ready. Let's go. Note taking. I see the note taking icon. All right, let's go. I just want to make sure that I have a pen so I can write notes as well for you here. In a sec. All right, there we go. Okay. So the 3 steps, or this can be said, the 3 things that every trader must know to be profitable. These are foundational concepts that will make your trading be unrecognizable. You're going to find that out. All right, let's go. All right, I'm going to skip the introductory stuff about me and jump right into the first item. Now, the first item is regarding what I call state. Now, listen to me carefully. There are far too many people who do not understand the concept that the market has a variety of different states. This is very important to understand. And it's very much like you. You have a variety of different states. Sometimes you're happy, sometimes you're sad, sometimes you're melancholy, sometimes you're angry. The market has multiple states as well. And if you don't know what those individual states are and how to differentiate them, you will almost never be a consistent trader, because each individual market state requires a certain type of trading. Matching the style of trading with the proper state is one of the most important things when it comes to consistent trading. So we're going to talk about a variety of different market states. When you emerge out of this session, you'll know the states. You'll know which states are the best states to trade from, which states statistically produce the most powerful trades. All right, let's go. So, state. Before I actually touch on it, we have to talk a bit about moving averages, the first of which is the 20-period moving average. All right. Now, if you followed my work for any period of time, you understand that I am a big user of 2 key moving averages, the 20-period moving average and the 200-period moving average, right? Okay. They're both simple moving averages. In their nature, I have found no evidence in my 40-plus years of market play that the sexier varieties of moving averages work any better than the simple moving averages. So I am a simple moving average person, okay? 20-period moving average is simple in nature. Now, what's important to know about the 20-period moving average, which I consider a permanent fixture on every chart you ever look at, no matter what the time frame, no matter what the market. I don't consider a chart unless it is also accompanied by this moving average. I will never look at a chart without this moving average, the 20-period simple moving average. Now, what's important about this moving average? First of all, it is the strongest, it is the most powerful in its characteristics when it is sloping. I'm going to repeat that. All right, that is something that is noteworthy to take down. The 20-period moving average is more potent when it is sloping. It is the weakest when it is flat. Now, what exactly do I mean by more potent? Well, it's more potent in its support and resistance qualities. The 20-period moving average has support and resistance qualities, meaning that when it is sloping upward, it has a tendency to serve as in the area of a floor for your stock. So your stock will tend to drop and bottom out near the 20-period moving average. All right. And it will tend to do that multiple times. All right. At some point, it will break, but that rising or sloping 20-period moving average is a very solid area of support when a stock is trending to the upside, which is evidenced by a sloping and upward sloping 20-period moving average. If your 20-period moving average is sloping, and particularly at about a 45-degree angle, that is when its support qualities are the strongest. So you can have a milder slope that the support qualities aren't as strong. They're there, but aren't as strong. But that 45-degree angle-like slope is your most powerful. Now, the other thing that I think is noteworthy, that's very noteworthy and that you should remember is that the 20-period moving average, like any other moving average, is not a skinny line as the chart would have you believe. It's more like an area. So a lot of people get confused when their stock sort of dips slightly below the 20-period moving average, and they erroneously believe or think that the 20-period moving average is broken, but not necessarily. Why? Because it's more like a zone or an area of support. So a little bit above it, on it, and a little bit below it. This is very important to understand. Your 20-period moving average is not a skinny line. It's a zone. All right. So the little area above the 20, on the 20, and the little area below the 20 are all kind of like the 20-period moving average. The 20-period moving average is thicker than the chart would have you believe. Write that down. I don't want you getting fooled by these temporary blips below your 20-period moving average, and you think that your 20-period moving average is broken. It's not broken with little blips, all right? Very important to understand. Okay, in the same way that the 20-period moving average is powerful as far as support qualities are concerned when it is sloping at that 45-degree angle, it is just as powerful as resistance when it's sloping at a 45-degree angle to the downside. So your stock will tend to top out at or around the 20-period moving average multiple times during a downtrend. All right? So when your 20-period moving average is declining at about a 45-degree angle, it is a very powerful area of resistance. When it is rising at a 45-degree angle, it is a very powerful area of support for your stock. When it is flat, your stock will tend to crisscross it like that, almost as if the stock is ignoring the 20-period moving average, as if the 20-period moving average is not there, as if the stock is not respecting the 20-period moving average because it's flat. Flat means the 20-period moving average is sort of asleep. It's resting. It hasn't lost its ability. It's just resting. We all need rest. When it is resting, don't expect your stock to respect or bounce off of or hold support or resistance based on the 20 when it is flat. It is at its weakest position. All right? Very important to understand. That's the first moving average and its characteristics and positions that you need to understand. All right? Basic, simple, but very powerful. When we put these things, when I put all of these simple things I'm going to explain to you together, it's going to come together in a very, very powerful, cohesive trading approach for you today. All right. Now, let's move to the 200 period moving average. All right. Because this is the granddaddy of all moving averages. All right. I, once again, do not consider a chart unless it is accompanied by both the 20 period moving average and, of course, the 200. In the same fashion, this is a simple moving average. All right. Measuring 200 bars of your current chart. Okay. Now, unlike the 20, the 200 period moving average is the most powerful when it is flat, and it is less powerful when it is sloping. So it has the opposite characteristics. When it is flat, it is extremely powerful as a moving average. What do I mean by powerful? Its support and resistance qualities are very, very strong, which means that if your stock is coming down to a flat 200, it will tend to bounce and find significant support off of that. If your stock is coming from below, it will tend to find that overhead flat 200 as a ceiling. Okay, so the flatter your 200 period moving average, the more powerful your 200 period moving average. If your stock is above the 200, it will tend to find support at or around the 200. If your stock is below the 200, it will tend to find resistance at or near the 200. Once again, it can blip above and below, and that not necessarily mean a break. The 200, very much like the 20, is more like a zone, an area. Don't think it's a skinny line. So there's an area above the 200 and an area below the 200 that all counts as the 200. This fools a lot of traders. All right? So the way I really want you guys to think about this is I want you to think of the moving averages more like boxing ropes that you can lean against. So since your moving average on your chart can't lean, it just shows you as a mild break, but that's more like the stock leaning against the ropes. It's not breaking it. So these mild penetrations are leans, like leaning against a fence that has some play, but you come back. They're not necessarily breaks. That's very important to understand. All right. Now, the 200, as we've been stating, is the most powerful when it is flat. It does not mean that the 200 doesn't have power when it is sloping. It's just less so. All right. So you drop in power a little bit. You drop in power a little bit when the 200 is sloping up or down. So the 20 period moving average is the most powerful when it is sloping. The 200 is the most powerful when it is flat. All right. Very important. And once again, no charts are to ever be looked at without the 20 and the 200. All right. Now, here's where we get to state. Now, guys, I'm going to tell you this. I consider this right here the most important part of our talk. It might not be the most exciting part, but you've got to get this. It's simple, but you got to get it because everything falls in place from this right here, what we're about to talk about. Everything falls in place. Get this right, and the rest gets relatively easy. All right? All right? Very, very important. Hope you guys are taking some notes here. All right, let's go. All right, now, the narrow state. There is a quick and dirty way of determining when your stock is in a narrow state. Now, why do we want to know when a stock is in a narrow state? Because, listen to me carefully, your best trades in your entire life, in your entire career, will come from a narrow state. I'm going to repeat that. That's a clue. Write this down. The best trades of your life, the best trades of your career, the ones that make you the most money, the ones that have the most flow, the ones that have the most follow through, the ones that give you the highest degree of consistency and joy, the ones that make you want to jump up and down and high five all of your friends, they're going to come from narrow states. If I can convince you to be a narrow state expert, if I can convince you to make sure you're doing at least 80% of your trades from narrow states, you are going to be okay. That's how important this is. Narrow states produce the best trades. Now, there's a quick and dirty way of determining if your stock is in a narrow state. It's simple. Is the 20 and the 200 period moving average relatively close together? If they are relatively close together, you are dealing with a stock that has a narrow state. It's as simple as that. All right? I'm going to repeat that. The quick and dirty way of determining if your stock is in a narrow state, the 20 period moving average and the 200 period moving average are close together. Now, we're going to improve on that. Not only if they're close together, the best narrow states are when both of the moving averages are not only close together, but they're also flat. So the 20 period moving average is flat, laying on its back. The 200 period moving average is flat. And both flat moving averages are close together, almost like railroad tracks, or sometimes touching, sometimes not. Now, what's important to understand about this is that I don't want you to think you need a geometric tool to measure the space. Let me see how far apart the 20 and the 200 is. I don't want you trading like that. It's an eyeball, relatively close together, just not far apart. All right? Close together, doesn't have to be touching. All right? Just not far apart, relatively close together, and both flat. That's the creme de la creme of your flat states. Flat and both together. All right? All right, not like this, but flat and both together. Now, here is the final piece to this. If both your moving averages are both flat and they're close together and your stock is in between the two, OMG. Get ready for freaking blast off. You got that? If your 20 is flat, your 200 is flat, they are close together, and the stock is sandwiched in between and is also flat, you're about to experience statistically one of those trades that make up the best trades of your life. This is the ultimate. This is the state that I want you to be an expert at identifying and grabbing, because this is the one that's going to give you the most explosive gains of your entire career. Let me know you have. As a matter of fact, I got to see your faces here. It's too important for me not to see your faces. I need to see, do you understand this best of all narrow states? I'm going to take a look at you right now. I need to see your comments before I move on. Do you understand? Flat 200, flat 20, stock, flat, sandwiched in between. All right? Best of all worlds. Tell me you understand it. I know we're operating on a delay. I will take a sip of coffee. I wait for you. You got this? Make sense? Good? Let me know. I want to see your comments. Yes, good. I'm getting all the goods. Okay, good, 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 good. All right. Best trades of your life are going to come from this state. Now, you might say, well, Oliver, if it's that special, how often does it happen? Am I going to be waiting for days and weeks for this? This happens all the freaking time. I will never teach you something that does not have a relatively high frequency in terms of its occurrence, because how else are you going to make a living in the markets? You need repeatable things. This is very, very repeatable. This is something that you can find virtually every single day of your life. It is not something that happens infrequently. Now, I want to explain to you why this is so potent. I want to explain to you what that picture really is telling you about the market. You see, the market simply vacillates between two states, wide and narrow. Well, it's three states. It's wide, it's narrow, then it goes to not so narrow, then it goes to wide. But the extremes are wide, narrow, and wide. Or another way of looking at this is this way, guys. Another way of looking at this is your stock, all markets do is vacillate between no volatility and volatility. And then from volatility, it shrinks back to no volatility. So this state of no volatility displays itself when everything goes dormant. I'm going to repeat that. When your market goes to a no volatile state, it is displayed, that no volatile state, no volatility state is visually displayed by all items going dormant. So your 20 is dormant, your 200 is dormant, and your stock is dormant. They're lying on their backs. They're taking naps. They're all three asleep. All the volatility has been squeezed out of the market. Now, here's why that's important. Once a market goes no volatility, what do you think is next for it? What is next? After the market has squeezed all the volatility out of itself, what do you think is next? You tell me. If we've gone to no volatility, what's next? That's right. Volatility. And we want volatility. We want explosive volatility. You understand? We want to capture volatility. So the best time to capture volatility is when you identify the market when it has gone to no volatility. All right? Make sense? All right, very important. Very important. Okay. Excellent. You guys are getting it. I like that. You guys are getting it. All right, now, I'm going to show you, we're going to look at a lot of examples of this, guys. Okay, so this no volatile state. Now, this is the market telling you all volatility is gone, and what's next? Volatility. But which way? It could be you could get the volatility to the upside. Boom! Or you could get the volatility to the downside. Boom! Right? It doesn't matter. We want to capture the very start of volatility right there. If it does it to the upside right there. We also want to capture the very beginning of the volatility to the downside right there. Now, we don't have to know which one it's going to be in advance. All we have to do is wait to see which one happens first. Where does the volatility start to show up? Does it start to show up on the upside first, or does it start to show up on the downside? But at any rate, I want you to remember this. This is where we want. This is where we want to grab our play out of this state. You don't necessarily want to go in this state, all right? You don't want to be in the state. You want to be right on the emergence out of the narrow state. Boom! out of the narrow state. Boom! And oftentimes, out of the narrow state will look like this. Let me show you. Oftentimes, out of the narrow state will look like this. Boom! We want that. On the reverse side, it'll look like this. Oftentimes, boom! And we want that. All right? Just remember how to identify the best of the best narrow states. All three items are flat. Your 20, your 200, and your stock. Now, let's go to the second best narrow state. This is a little less potent, but it still has some potency. It's just not as powerful as the three things together. Okay? This is a little less powerful. It still has potency, just not as potent as the creme de la creme scenario I explained to you. All right? So here's a scenario oftentimes where your stock looks like you've got the flat 200, but the 20 is sloping. So one of them is not flat, or in this case, the 20 is not flat, the 200 is flat, and a lot of times your stock is like doing like that, and boom, will come out of that narrow state there. Not as potent as all flat, but still has relevance, still has some potency. Why? Because the two moving averages are relatively close. They're not relatively close here. This is not important. It's when they get close that the market is telling you the volatility has gotten low enough to now be ready to produce another explosion. All right? All right. Moving averages relatively close together. The 200 is flat. The 20 is not. Still potent, not as potent as the first one. Now, the third state, the third narrow state, why do we call it narrow? Because the two moving averages are relatively close together. Look, they're not close together there. That's not important. They're close together here. All right? But in this case, both of them are not flat. Not as potent as all three items flat, but still has relevance. Why? Because the market is still telling us that we're going to somewhat of a no volatility state, but this is the least of the three. Okay? This is the least of the three. And there are very sophisticated reasons as to why this is the least of the three. And I don't want to go too deeply into this, but I'll tell you very briefly that it's because you've got two themes conflicting. So you've got a shorter term trend moving down as evidenced by your 20, and your longer term trend is moving up as evidenced by your 200. And they're converging, they're colliding with each other, and your stocks tend to be very whippy in this scenario because it's sort of like two currents clashing, or hot and cold air clashing and creating thunder. All right? So this would be the least. It still has relevance because the moving averages are close, but it has the least of the three. Okay. Now, let's talk about wide states, okay? Here, your state is narrow, all right? Narrow state. This stock started from a narrow state and broke out of the narrow state and started moving to the upside. We know this because your 20-period moving average is rising. Your 200 remains relatively flat in this scenario a lot of times. But your 200, your 20 can get so separated that you can now say wow, I now have a wide state. It's not wide here. It's not super wide here either. It's not narrow, but it's not super wide. This would be more of a neutral state. So narrow state here, neutral state there, and wide state here. Neutral state here, and, or I would say, I guess I should use regular there, regular state, and narrow state. Now, it's important, guys, this is so important because this sets up being able to determine where your stock is in the state, determines how you play in that part of the state. If you don't get this down, I'm telling you, you're going to always struggle. But you're going to stop struggling a lot with this concept today. So please make sure you get this, okay? Check this out. In the narrow state, we know to buy the emergence out of the narrow state. We know that. Okay? We're going to buy the emergence out of the narrow state. When you are in the regular state, you can buy off the 20-period moving average. You can buy retests off the 20-period moving average. You can buy retests off the 20-period moving average. So in the narrow state, we buy the emergence out of the narrow state. In the regular state, we buy surges, we buy events off the 20-period moving average. That becomes our trading mode. Okay? I am going to quickly introduce something. This is what I call, we'll get into this a little bit later more. This is what I call a color change, where you have a green bar takes out a red bar. When this happens there, and there, and there, when you get a green bar taking out a red bar at or near the rising 20-period moving average in the regular state, you're playing, you're trading smart. So we buy the emergence out of the narrow state when we've got a narrow state. We buy color changes off the 20 in the regular state. In the wide state, we stop buying 20 near the 20. When your state gets too wide, the 20-period moving average trading game stops. You're too wide for it. In fact, in the wide state, we look to play back the other way. We look to short the market from wide states. We look for sharp, powerful red bars from narrow states that we know will have follow through. So put all of this together. In the narrow state, we look for strong green bars that take us out of the narrow state. In the regular state, we look for color changes off the 20-period moving average. In the wide state, we reverse. We look for power red bars to go short because the market is ready to start moving back to a no volatility state again. Wow. Do you see and understand all three parts of the states and how they should be played? Is that understood? I want to see your faces again. I got to see your comments. I'm not moving until I see a variety of you tell me, Oliver, we got it. I got this. This is powerful, guys. This is simple, but oh my goodness, it's powerful. it cuts through, captures, you understand? And clarifies proper trading, right? There are far too many of you buying when your item is in the wrong state. It's too late. It's too wide. There are some of you scared to commit out of a narrow state. And there are some of you that are confused in the regular state, like the stock's gotten already going. Did I miss it? Not necessarily. In the regular state, that 20-period moving average is your guide, right? This is powerful. You're going to see how we're going to put this together. It's freaking powerful. All right, let's go. Good. Okay. Now, we got here. There we go. All right. So that's the wide state up, but there's also a wide state down. So always want you to remember your stock always starts from a narrow state. It started from a narrow state here. Then it emerged out of that narrow state, usually with power. Boom! We want that. That's the narrow state part. Then you have the regular part, right? This is the narrow state part. Here's the regular, where we want to take color changes at or near the declining 20 as our trades. Color changes at or near the declining 20. So we grab the emergence out of the narrow state and we continue to play this off the 20-period moving average once it gets into the regular state. We want to maximize the profitable opportunities it presents along the way in its downtrend. What's a color change on the way down? It's when a green bar gets taken out by a red bar. Boom! When this happens, green bar wipes out a red bar there, at or near the 20. When we get into a wide state, the game stops. The shorting stops. In fact, we're looking to go the other way now. That trigger is often power green bar. Boom! From a wide state that signals we're probably about to go back the other way. So you have got to know how to identify the state that you're in and which part of the state are you in? You understand? This will make the game plan that you're supposed to deploy very clear. And a big part of placing incorrect, unintelligent trades is that it's not that the trade that you took necessarily was bad. It's just that that type of trade doesn't fit this type of state. When you get the trade and the state correctly aligned, man, the consistency goes through the roof. The profitability goes through the roof. All right, let's get back. Now, step one was helping you understand states, okay? Now we go to step 2. Remember, there's 3 in total. Go to step 2. Position. So first there's state, and then there is position. Okay? I need you to understand that there are 7 positions based on state, your state. 7 positions. So I want you to imagine here that there's a narrow state. I've drawn this out for you. We've got a narrow state here where we've got the best narrow state. We've got the flat 20-period moving average. We've got the flat 200-period moving average. And we got the stop here, sandwiched in between. Now, right above the state, the area right above the state is your absolute best buy area. You cannot have a better buy area than right there. It's a zone. It's not like a dot like here. It's a zone. It's here. It's here. It's the area right above your narrow state. Listen to me carefully, traders. How should I say this? I know I won't be able to do it. You won't listen. I know this. But if I could find a way, to force you to make sure 80% or more of your trades are in position 1, you're going to be a star. If I could do that, I know I can't. I know you won't listen. I know you won't do it. But if I could find a way, if I could convince you that I need to be a position 1 expert, I need to be a dominant position 1 trader, I need to make sure that 80+% of all of my buys are right above flat, tight, narrow states, and I'm going to be a star. If I could convince you to do that, you would be a trading star. Why? Because the very best trades of your life come from position 1. The most powerful trades of your life come from position 1. There are other positions, but none are as powerful. None are as consistent. None are as flowy as the ones you take from position 1. If there were some way I could convince you, you'd be a star. It's powerful, guys. Position 1 trading. I want a position 1 trading team. I actually want the trading team to be called position 1. I want position 1 on their shirts. I want position 1 on their caps. I want, when the team is announced, here comes the championship team, position 1. I want you to be on the position 1 team. Your best trades are going to come from position 1. Boom, to the upside. Your best trades on the downside are going to come from negative position 1 on the downside. Boom. The best shorts of your life are right under that flat, narrow state. Longs are right above it. Shorts are right below it. Both sides of the equation. And it doesn't matter which. You don't choose which. You don't have a favorite. You play whatever the market gives you. If the market gives you a +1 position and power, if you get power in +1, you buy that power. Boom. You buy that. Boom. You get power in negative position 1, you short that. Boom. And you will be going to the bank most of the time. If I could just get you to live the majority of your life in position 1 as a trader, you'd be a star. you'd be a megastar in your trading. Now, the very next position is position 2. It's not close to your state, but it's not super far either. This is a good position to buy in. It's also occasionally a good position to short if you get strong enough power in this position. But mostly, it's a long position as well. Again, it's not close, but it's not super far either. That also is a very decent buy position. This is the best, but this is the second best. All right? Now, position 3 is a wide state. Your stock has gotten too far away from its narrow state. This is too far. Way up there, far away. This is a better position to go short on power. I want to dive into power because your stock is ready to move back down toward the narrow state again. So, we want power here. We want power to the upside there. And we want power to the downside up there in position 3. We play green power in position 1 and 2. Sometimes we can play red power in 2, but let's call 2 a buy zone for today. So we want power in position 1, power in position 2, green power. We want red power in position 3. Tell me you got this. Tell me you got this. I got to see it. I won't believe it until I see it. Got this? This is trading by the freaking numbers. This is how it's supposed to be done. Knowing when to go long, knowing when to go short. You got this, guys? Make sense? This is freaking powerful. Woo! Wait till we put this all together. It's going to blow your minds. You'll see. We're not done yet. When we put this together, it's going to blow your mind. Got this, taking notes. Awesome. Okay, let's get back. Excited. Love this. Freaking love it, man. Freaking love it, man. Okay, let's go. All right. Same thing, guys. Same thing on the downside. Same thing on the downside. All right. I want power here. I will dive into that power. Boom! Position 1. These are the best trades of my life come from position 1. Power can also be in position 2. That position 2 is not close, but not super far either. But position 3, I'm looking for the reverse. I'm looking for power to the upside, where this is likely start moving back up. So I want you to understand this, that all markets do is vacillate from narrow state to wide state, back to narrow state, oftentimes wide state, narrow state, wide state, back to narrow state. That's all markets ever do. And as long as you know how to read the position, you're coming out of your narrow state here. Boom. You're playing off your 20-period moving average here. Boom. You're going the other way here. Boom. You're playing power here, power to the upside there, power to the downside here. You are playing power to the downside here. You are playing power to the downside here. You are playing power to the upside from down there. You got to know where you are in your state. Boom. 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 It is simple, but it's extraordinarily powerful. This cuts through, captures, clarifies proper trading in the proper position. If you do not know about position as a trader, you have no hope for consistency because you will get your trades conflicting with the proper position. All right. Now, all right. We know about this as the wide state. Your stock is moved here from narrow state to wide state, and it's ready to drop from here again. Okay? Here, you've gone from narrow state to boom, now gotten to wide state, and now is ready to move back from there. But you know that you capture the move out of narrow state. You continue to play off the 20 in the regular state, and you start looking to go the other way out of the wide state. Freaking beautiful. Okay. All right. Step 3. All right. Hope you're ready for this. I told you, I promised you 3 things today that's going to freaking revolutionize your trading. All right. I'm going to put the third part in place. Then we're going to put them together. All right. When we do that, I promise you, your mind's going to be blown. All right. So step 3 here. Step 3 is event. Now, we have state. We have the position based on the state. Now we need the event. Now, we need to put the event. What events are actionable events in the right position off the right state? So these are the 3 things you've got to get right. Just having an actionable event doesn't do very much for you. That actionable event needs to be in the right position. You got to match the event with the right position. That position has to be in the proper state. You got to get all 3 right. I have often explained this concept in real estate terms. So it's like one of the keys to doing real estate well is, okay, let me pick the state first that I want to live in, that I want the real estate in. Then let me pick what's the position of the plot of land in the state. And then what kind of house am I going to build on the land? You got to get all 3 right. You got to pick the right state or the right community or the right county or whatever. You got to pick the right state. Then you got to pick the right piece of land, that's position. What's the position of the land in the state? And then you got to build the right house on it. So in our scenario, what's the house? The actionable event. That's the house. That's what I dive into. I live in there. I go in the house, in the event. But the event has to be on the right plot of land, the position. And that plot of land should be in the right state. We get all three of those things together. Trading flows, trading clicks. Your consistency goes through the roof. Your profitability explodes. Right? Any one of those off, and you're depleting, the trade is depleted of power. When all three of those things are aligned, you've got the most powerful plays of your life. All right, of your career. So step 3 are the actionable events, guys. We've been talking about what I've called power bar. I call these elephant bars. You've got the green elephant bar. It's just a surging bar. Powerful, taller, longer than your average bars. It indicates institutional sponsorship. The point that needs to be understood about elephant bars is that you and I can't form them. Your uncle and your aunts and your cousins can't form elephant bars when they do anything in the market. Nobody cares, all right? In order for an elephant bar to form, you are guaranteed to know that that is major institutional buying going on. They're the only ones that can create elephant bars in your heavily traded items. So when you get a narrow state, narrow flat state, and an elephant bar emerging out of it, that is your very best opportunity. You want to dive into that elephant bar, or you can buy the very next bar that clears the high of that elephant bar. I tell my traders to do both, actually. All right? You can buy into the elephant bar before it finishes trading, or you can buy the next bar that trades just above the high of the elephant bar. A lot of my traders do both. All right? Sometimes that stop, you buy the bar, that stop is under the bar sometimes, but sometimes it's under the state. We will get to that. All right? You also have the opposite, guys. I'm just showing you the bull side, but you do know that there are bear elephant bars that we love in position 1. Bear elephant bar would be something like this. Boom. Narrow state. It's emerging out of a narrow state. We want to dive into that bear elephant bar and or dive into the bar, the next bar that clears the low of that elephant bar. Many of my traders do both. All right. Now, the next actionable event in the right position is a tail bar. Now, tail bars are mostly tail, guys. Some people, they call anything a tail bar, like they'll call this a tail bar. When most of the bar is body, that's not a tail bar. A tail bar is when most of the bar is a tail. And the smallest part is the body. It's like a snowman. See? That is not really an official tail bar. It has a wick, but it's not officially a tail bar. An official tail bar is very powerful. All right? So if the tail bar is the bottoming tail bar, it's indicated that the price is likely to move higher. And if you get one of these out of a narrow state, wow. Bottoming tail bar out of a narrow state. Or if you get one of these in your regular state, so remember your narrow state, you emerge out of your narrow state. But let's say here is your 20 in the regular state. and you get bottoming tail bars right off of the rising 20-period moving average. Boom, boom, boom. That's fine too. But tail bars in the right position, either tail bars here in position 1 or tail bars off the 20-period moving average here in regular. Here's the narrow state, here's the regular state, and up here is the wide state where you stop the game and think about going the other way. All right? So again, you have topping tail bars that display the opposite. All right? You can get narrow state here, and boom, here's a topping tail bar right in position 1. That's going down, brothers and sisters. So tail bars are actionable events, but only in the right position. And then we have what I call color changes. There are a variety of different color changes, color change events, guys. This one happens to be the Bull 180 color event, but there are others. But any color change, what's a color change? The market changes from red, market changes from red, and then boom, green takes out the high of red. We dive in on that color change. But remember, we want the color change, boom, we're diving into the part that goes right above the red. We're diving in right there. It's taking out the red bar, right? But we want to make sure that this also is in a right position. A color change or a Bull 180 right off of position 1 is very powerful. A Bull 180 off the 20-period moving average is very powerful in your regular state. So you were narrow, then you move to regular, and here, a Bull 180, let's get that 20-period moving average here. A Bull 180 here off the 20. Boom. A Bull 180 or color change here off the 20. Boom. Once you get too high, the game stops and you start thinking about going the other way. But these in position 1, these in position 2, or in the regular state, and once you go wide, you're looking for the reverse move. Okay? And those, guys, that's your 3 actionable events. You don't need really any more. Now, I teach my traders 14 actionable events. I'm giving you 3. These 3 are the big ones. These 3 are the most frequently traded events. We take these 3 events, elephants, tails, color changes, in the right position, off the right states, our trading freaking explodes. Simple but powerful. 3 things. Tradable event, in the right positions, off the right states. Now, I told you that if you had these 3 things, it's going to revolutionize your trading. And it will. What I want to show you now, right, is I want to show you a lot of people, not a lot, some people sometimes say, when I do these master classes, Oliver, when I show them the examples of real trading examples, They're like, Oliver, you're cherry picking. Because, I'm I can't show you trading examples now. It's Saturday. So I show you trading examples from the past. And some people say, well, Oliver, you're cherry picking your examples. So here's what we're going to do, all right? So that no one thinks that. I am just going to show you trades from my traders using these three things from yesterday, not Thursday, not Tuesday, not a month before, not a chart from a year ago. Every single thing I'm about to show you, putting these three things together, were trades from yesterday. That's it. Just yesterday. And every single one of these were trades taken by my traders. Now, some of my traders are here in the crowd. All right. I'd love if they say, that's my trade, because I'm pulling from their trades. I'm even pulling from a couple of trades I took yesterday based on these three things. All right. So if you're one of my traders and you're in a crowd, don't feel shy. Just say, yeah, that's my trade. I took that trade. All right. Well, let's put this together. I'm going to show you how powerful these three things are and how much you could have made just yesterday playing off these three things. Let's go. All right. Trades, putting it all together. NVIDIA. Now, the first thing I need you to do, every single time we look at a chart, you need to first grab the state. So do it now for me. Grab the state. You know how to do it. Take the tool. So we're grabbing the state from the start of Friday. That's May 8th. You see the date there. That's May 8th. That's the start. Now, at the start of May 8th, what was your state? Grab that 20-period moving average. Grab that 200-period moving average. Are they close together? They're so freaking close together. They're kissing each other. They're so close together, they're one and the same. This picture is telling you that all the volatility is out of the stock and an explosion upward or downward is going to emerge. That morning, the stock gaps to the upside here. Now, I'm going to give you something that's a bit sophisticated here, all right? When a stock, it gaps out of a narrow state, it's a gap and go play. I'm going to repeat that. It's down. When a stock gaps, you got a narrow state, the stock's gaps out of the narrow state. It's born out of the narrow state. It's a gap and go play. So I want to show you this. I didn't intend to do. This is a bit more advanced that I usually only teach my traders, but I'm going to teach you this one trick, okay? Get ready. I teach my traders this didn't happen yet. When your stock gaps, I want you to imagine that the stock did not gap. So here, and I want you to draw, here's where the stock opens right there. So I tell them, I want you to mentally draw a bar up from the close yesterday. I want you to fill the gap in as if it didn't gap. Fill it in your mind. And look at what you have. If it traded there instead of gapping there, you have an elephant bar coming out of a narrow state, right? Now, remember I told you how to play elephant bars? You buy in the bar and or you buy the next bar that trades above the high, right? Well, if the gap is the first bar, this is advanced, if the gap is the first bar because we filled it in, then isn't this the next bar that starts printing green here? Look. That's the buy point. Did you catch that? That's the buy point, traders. Did you catch that? Might be too advanced for some of you. Boom! All we need is a little more green after that gap. We're considering the little more green as the second bar because the gap is the first bar. And the rest is freaking history. Boom! Did you catch that? Let me see if you catch it. I don't know if you guys caught it. Did you catch that? Did you catch that? Got it? That's powerful. The gap is bar one. A little bit more green is bar two. Boom! Gap and go, baby. Gap and go, gap and go, gap and go. All right. Glad you're picking up what I'm laying down. All right, so let's go back to this. This is crazy. Guys, it's gonna get crazier. This is crazy. It's gonna get crazier. We'll see. All right. So traders are in there because the gap is bar one. Now, I got to give you something else. Let's say they buy 2 lots, right? Stop under the bar. They like. I make them, it's mandatory that they add on the first color change. When does NVIDIA take out a red bar next? Not a tail, a bar. You see that first red one right there? When is that red taken out? Boom, they have to buy that one too. They don't have to do the third one. They don't have to do the second one, but they have to do the first one. So they have to add on the first color change. So it's a lot of times it's a double buy. It's buy the bar, buy the first color change. All right? Buy the bar, buy the first color change. Sorry about that, guys. Somebody's calling me. They don't know I'm on an event. What the heck is going on with these people? You're calling me in the middle of my event. And if you don't know I have an event, you must not be that important. You know what I'm saying? Crazy. Let's not be freaking that important. All right, so we buy the event. We buy the event and we add on the first color change, which is also an event. All right? Now, guys, another thing I want to point out here. This is your state. This is position 1. This is position 2. This is position 3. What are you doing? So you've already taken advantage of position 1. Boom. You've taken advantage of the neutral part of the move as well with the color change here, with the regular part of the change. So you grab the emergence out of the state. You grab the color change. You move toward position 3. You want to be out of this. You want to be taking profits. Look at your strong color change from position 3. My traders whacked this on the long side and flipped short and whacked it on the short side. It was like they played this like the frickin' Three Stooges. Now, I don't know if I'm dating myself. Some of you might remember or have heard of the Three Stooges, right? And there's always this funny scene with the Three Stooges where one of them slaps both of them with one slap. Well, that's what we call this. We call this a Three Stooges play. I whacked both sides of this with one slap. They got the long side and they got the short side on the way down. That's mastery. All right? Now, I want you to understand, before we go to the next chart, I need you to understand that you have to understand the formula. There's a formula here. We're getting in on out the emergence out of the narrow state. We are adding on the first color change. We are exiting as we get wide. You're exiting the play as you get wide. You do not want to hold on long from the wide state. From the wide state, there might be an opportunity to go the other way. That's the formula. Okay? Now, let's move to the next. All of these are trades, guys. All of these are trades. AMD. All right. The first thing I need you to do every single time, grab the state. Grab your state. Grab your state. Grab that 20-period moving average. Grab that 200-period moving average. Grab that stock. Now, remember the types of narrow states I told you about? Remember I told you that there's one that is the creme de la creme. It's all three things are flat. The 20 is flat, the 200 is flat, and the stock is flat in between, sandwiched in between the two. Well, this is what you have here. Boom. You've got relatively flat 20-period moving average. It's not sloping at a 45-degree angle. You got a relatively flat 200. Your stock is flat and sandwiched in between. Your stock gaps out of that narrow state. We fill the gap in. That's bar one. We buy a little bit of green above bar one, right there. Boom! Love that sound. Boom. Boom. All right. Boom. And the first color change happens here. Boom. Green takes out red, and the rest is history. Now listen to this sound, guys. Listen to this sound. You're definitely wide here. You got a powerful color change. You can give that a shot from a wide state. Now, what I want you to do, map out your positions. Map out your position. This is position one. You're taking a position two trade here because of the gap. This is position three. And if anything, you're going the other way. At least for, you can if you like. So we grab the emergence out of the narrow state. We grab the color change event. We're getting out somewhere before wide and maybe going the other way wide. Powerful. Same frickin' formula every single time. Next trade was Citibank. What do I want you to do every single time you are to grab your state? Grab that 20, grab that 200. All right? This is all May 8th. 20 is here, 200's there. That's relatively close. That's a narrow state. Your stock gaps out of the narrow state, but gives you a red bar. A red bar is a no-go. But the next bar gives us the color change. Boom! That's the buy. The color change event is the buy. The rest is history. Right? So we come from this narrow state, we get to wide. Now, how do we really know we're wide? When your stock is separated from your 20 and your 20 is separated from the 200. That's what I call, some of you know this from past videos, I call that the 3-finger spread. That's when you're super wide. Like, you don't need the 3-finger spread to be wide. You just need the 20 and the 200 to be far apart. But when you got the 3-finger spread, that's super wide. So there's a wide state, and then there's a super wide state. The super wide state is when all 3 items are spread apart like that. Stock is way up there above the 20. 20 is way up there above. No, so the stock is way up there above the 20. 20 is way up there above the 200. Neither item is close to each other. That's the super wide state. And if you get power from up there, that's what you usually get. If you get power from Pluto up there, it's like, oh, power from up there, boom! Get ready. All right? It's crazy, crazy. And look at your triple wide state. Look at your 3-finger spread and look at power from up there. Power red. Boom. So we whacked this on the long side, the color change on the long side. We whacked it on the short side. Power from Pluto, 3-finger spread. That's masterful trading. The timing of which couldn't be more perfect. It's not rocket science, guys. It's just putting these 3 things together. It's not rocket science. Here was Cisco. Grab your state. Do it now. Just sip coffee. Grab that state. Grab that 20. Grab that 200. $20, $200, flat, together. Fill that gap in. That's bar 1. If you get a little bit more green, boom. That's bar 2. That's your buy. Boom. Right? Some of my traders might take some profits here, but this is also another go. Clearing elephant bar. Boom. For your secondary play. Very, very powerful. Very powerful. You don't always get adding opportunities, but most of the time you do, actually. Powerful. This is all yesterday. All yesterday. Intel. All right? Intel. Let me do this a different color. Here's your 200. Here's your 20. Here's your state. I like to fill it in because that makes it clearer for you. Here's your elephant bar in position 1. The rest is freaking history. Grab the elephant, grab the first color change. Boom. And the rest is history. Powerful. Powerful. There are many other things I need to teach you, though. I need to teach you trade management after these two buys. See, there's a buy here and there's a buy here. But so now your trade management, how do you maximize this? That's from when you become my traders. You got to fill in these blanks. There's still blanks there. But what I'm sharing with you is the foundational key, because you won't have any trade to manage if you don't know how to choose the right trades and when to get into the right trades. That's what we're covering today. All right. All right, here's MU. Grab that state. Grab that state. You know what to do. Grab that 200. Grab that 20. Fill it in if it makes it clearer for you. Fill in that gap. If you get a little bit more green, you're golden. Boom. Right? You can take that first color change if you like. Now, you can have a super gap that puts you all the way in position 3. And if this one gives you green, you don't take this one because you don't go long on position 3. You only go long on positions 1 and 2. So if it's a super gap up there, all bets are off. Remember that. Remember your positions. Don't forget your positions. All right, here's a short. I actually played this. Try to grab that state. Grab that state. I was on the NVIDIA and this one. These were my two trades. Grab that state. Fill it in if you like. Boom. Topping tail bar. Fine with that. That tail is big enough. Rest is history. Look what happened from position 3. So we went from a position 1 to a position 3. But look, how do we know we're in a position 3? We're in the super position 3, right? Because we've got the stock far away from the 20 far away from the 200. That's that 3-finger spread, and you get the power bar off of position 3. And it took a while, but it's grinded higher. But I took this short right there. Now, I'm going to show you one slightly more advanced thing. I'm giving you a lot of gifts here today. I don't know why I feel generous, I guess, but here is this PLTR. You see, PLTR opened. This wasn't there, right? So it opened and it went up first. You see? So it opened and went up first. So I'm saying this is a green bar, but it's a green bar in the wrong position, right? That's a green bar in the wrong position, right? I need that green bar to disappear. When that green bar disappears right there, I'm all over it. So I was stalking it. Do you understand? We're stalkers. Trading stalkers, not people stalkers. Right? Not pervs. We're trade stalkers, not perverts. Let's not get it twisted. All right, so go back here. So when that green disappear. Boom! Right there. I drill this thing right there. Drilled it. Boom, 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 boom. And the rest was history. So this is a hidden color change. If, you saw green first and then red wiped it out. Boom! Right there. That's in what we call a hidden color change. That's a little bit more advanced entry. Oh man, I have so much to teach you guys. Beautiful. All right, QCOM. All right, grab the state, guys. You know what to do. Grab the state. I'm just showing you trades that, like, tons of my traders took these trades from Friday. All right. Tail bar. Boom. Stop under the tail bar. First color change. So the traders that played by the book, they bought here. I do buys in boxes. So they bought here, stop under the tail, and they bought the first color change. The first time green takes out a red bar is there, and the rest is history. Right? Powerful. QQQs. Grab that state. You know what to do. Grab the state. Fill it in. Gives you clarity. Fill it in if you like. Gap is born from a relatively narrow state, flat, narrow state. Fill in the gap. A little bit of green. Boom. First color change. Boom. Rest is history. Now listen carefully. Don't you love that sound? Gotta love it. You know I'm silly, but are you picking up how orderly, simple, but powerful this is? This is not guesswork. This is not, let me check the earnings. What did Jim Cramer say? It's none of that nonsense. Let me read the news. Is there any news on this? It's not how you trade. Trade like this. Trade by the numbers. You trade with a formula. You trade by the position. This is where your consistency comes from. Man, if you gave me a year, guys, if you gave me a year, you gave me 2 hours. You gave me 2 hours. And look at what you know. You're gonna, your trading from these 2 hours will never be the same. Do you understand this? 2 hours. If you gave me a freaking year, come on. Hoping some of you do. Hoping some of you do. All right. Now, Tesla, grab that state. You know what to do, guys. Come on, this is boring now. I'm getting bored. It's the same shit over and over again. But that's what good trading is supposed to be. You know, good trading is supposed to be boring because You're supposed to be doing the same thing over and over again, the same way every single time. That's where consistency comes from. You can't be doing one trade this way, I do this trade another way, I do another trade a different way. Like, how does consistency come from that, guys? Consistency comes from consistency. Consistency is born from doing the same thing consistently the same way every single time. You have to trade by a strict formula. And that formula or template you apply on the market every single time the same way. I buy out of the narrow state. I add on the first color. I buy out of the narrow state. I add on the first color change. I get out before wide state. Go the other way if I get power the other way. That formula over and over and over and over again, played the same way, is where the consistency comes from. Consistency begets consistency. Consistency is born from doing things consistently. Most people don't have any system, no approach, no plan, no formula to even apply consistently. They're out there like a ship at sea with no map, no compass, just floating around, checking out news, following other traders in Facebook chat rooms. Seriously? Serious? Listening to 19-year-old YouTubers claiming to be amazing traders. 19-year-olds with the Bugatti in the back. Bugatti, is that how we say it now? Is that how Andrew Tate says it? Look at my Bugatti in the back. All right, guys. You know the formula. You've got the three things. Look at this Uber play. A lot of my traders took this. Grab that state. You're emerging out of that state. Elephant bar. Boom. You got to grab that in that position one. You got to be out of this because you're wide now. That 3-finger spread. Can't be holding on when you've got a 3-finger spread. Right? Beautiful. Grab that state, guys. Remember, this is not the everything flat state. This is the 200 period moving average flat and the 20 sloping. Remember that version of the narrow state? I told you, still power. And what's born out of that narrow state? Boom. Power bar. Get in there. Get in there. Rest is history. You better be out of this now. You got the 3-finger spread. This is all yesterday. I'm not cherry picking anything here. Opportunity after opportunity after opportunity after opportunity. Grab that state. 200, 20. Fill it in if it gives you greater clarity. Power bar. Get in that power bar. Get in there. Get in there. Now, here's something interesting, guys. I tell my traders that Usually you put your stop right above the bar unless right above the bar is position 1. You don't get out in position 1, people. That's the position you get in. So if your stop is right in position 1, that's dumb. That's a dumb stop. You then have to go a stop above the state. Don't get stopped out in position 1. You get stopped out above the state. All right? That's don't get stopped out in position 1. Get stopped out above the state. Right? No. Put it down. Don't get fooled. Right. Look at this, WFC. Grab that state. I think we're done. Guys, it's time to finish here. You know this already now. Same formula. Get in. Boom. Emerging elephant bar out of the narrow state. Boom. Add on the first color change. Boom. The rest is history. If you want to keep playing, color change off your 20. Color change off the 20. Boom. Color change off the 20. Boom. OMG. Last but not least, look at the state. Grab your state. State. Look at where your stock closed at $70 basically the prior day. It gaps up big and moves to set almost 70, almost 78. That is 3. This is 1. This is 2. You're not doing anything on the buy side up there. Not after today. You're not. You're not getting fooled by these green bars way up there in Pluto land. You're too far from your state. No, you're playing the other way. Boom! You're freaking going to the bank. And then after you leave the bank, you're going to the freaking beach. That's the formula too. All right? We take a trade like that. We go to the bank and then we go to the beach. La playa. The bank, the beach. Right? We make bank, we go to the bank, and then we go to the beach. I like that. We make the bank, we go to the bank, and then we go to the beach. Yeah. Trading by the numbers, guys, it simplifies everything. Trade 1, 2, 3, position 1, position 2, position 3. Some people ask me, like, Oliver, do you think that it's possible that you can teach me how to trade? I always say, can you count to 3? You're always confused. Count to 3. Yeah, can you count to 3? Yeah, I can count to 3. Yeah, I can teach you how to trade then. Now, whether you will do it is another thing, but I can teach you. If you can count to 3, I can teach you. 3 positions above the narrow state. 1, 2, 3. Right? Very rarely are there things greater than 3 in trading. 3 positions above the state, 3 positions below the state. 2 moving averages. You're always within 1, 2, or 3. 2 moving averages. 2 color bars, green and red. 2 moving averages, 20 and the 200. 3 positions above the narrow state. 3 positions above the narrow state. 2 major states, narrow, wide, 2 actions, buy, sell, or 2 trades, long, short, 2 results, win, loss. You can freaking count to 3. You're either above the state or below the state. Trending or not trending. Going up or going down. Green or red. 20 or 200. Wide or narrow. It's crazy. If you can count to 3, you got most of the shit covered, right? It's not rocket science. People are overcomplicating the trading game when in fact, it's simple. It's made up of a bunch of things that stay within the number 3. You just need someone who's experienced enough to teach you and show you. There are far too many people who believe that you can do this on your own, and I'm telling you, you can't. It's like trying to become a professional athlete without ever, during your childhood, ever having a coach, ever having training. How is that possible? Every trader on Wall Street's been trained. There is no such thing as I did it naturally myself. The reason why you can't do it yourself is because the journey would be too long. It would be too long to have to go through discovering all the pitfalls, all the dead ends, making all the errors, hitting all the landmines. With training, it can be the person who has the experience. The proper training can be like, all right, we're going to avoid 98% of the landmines so you don't have to waste time. We're going to not go down these dead ends. Training can curtail and shorten the time it takes to know the fundamentals of correct trading. Otherwise, you have to go through discovery, a long discovery period, because you don't know what's right and wrong. You don't know what is a dead end, what turns out to be a dead end. You might waste 2.5 years on a dead end and realize, shit, I wasted 2.5 years on this. And there's never been a true, major, successful trader that has not been trained. And I will tell you, traders, that I'm still looking for traders. I am still willing to train you every single day, forever. No expiration. I am willing to fund you. If you do not have the capital, I will fund you. We will share the profits. But you will get trained every day. You will raise your level of market sophistication. You will understand and know how to handle the markets professionally. I am an expert. I know this might sound a bit egotistical, and I apologize in advance for it, but it's really not meant to be. I am an expert at transferring my 40 years of experience to you. I do that better than I believe anyone in the industry. I know how to explain it, teach it, train it, and in a way that it goes deep and your understanding of it is very powerful. Many people do not have that skill. I am blessed that way. I am blessed in the way where not only do I have 4 decades of experience, not only am I a real, true, decorated trader who continues to trade in your face every single day, right? But I also have the ability to give it to you. What benefit would it be if I did not have the skill to be able to transfer it to you? I can transfer the knowledge to you. These last 2 hours are just a little taste of that ability. I've transferred something that 99% of the people in this trading world do not know, which has placed you just because of these 2 hours, head and shoulders above them. The clarity you have gained with just 2 hours is immeasurable. I know this. Now, of course, you have to put this to work. I can't do it. But my part, teaching it to you, training you properly, I do that extraordinarily well. Now, if you could give me a year, my God, where do you think you would be in a year? If where you are after 2 hours, year. This is an activity that has life-changing capabilities, but you have to be trained correctly. You have to do it the right way. And you have to get the money out of the way, guys. Right? A lot of people are failing at this game because of lack of money. Most businesses fail because they're underfunded. Trading is a business. That's no exception. Most traders are out here showing up to a gunfight with a toothpick of capital. I've got the capital to cover that. So get the money out of the way. You need the proper capital too. But if this is something that you really want to do seriously, you found the right place. All right? You have found the right person. It's me. You have found the right place. And you have found the right program, which is what I want to talk to you about next. All right? If I may. So, guys, there are two types of traders, right? But only one of them has the potential to build freedom. There's the hope trader that trades on hope. He buys things because it looks good. They trade based on their feelings. They trade because it's like, I think this is a good buy. I think this is a good sell. I believe this is going to go up from here. You can't trade thoughts. Your thoughts are your enemy. Your feelings betray you in your trading. Do you understand this? Most people are out there trading on their thinking. And I'm drilled this home with my traders. Don't trade your thoughts. Your thoughts are not welcome here. You don't say, I think, would you give your capital to someone who said that they could take care, they could grow your capital, and when you give them the capital and it says, thank you very much, I think I can do well with this. I think I can trade with your capital. I think I can grow your wealth. You wouldn't, give me my capital back. We don't trade our thoughts. You don't think in this game. You know in this game. And I call those the hope traders, trading off their thoughts. I feel this is a bottom, trading off your feeling. How are you going to gain consistency trading from your thoughts? Which means that you don't know, because when you know, you don't think. You know your name. When I ask you your name, you don't think. I say, I think my name is John. No, you say, I know my name is John. I know today is Saturday. When you know, you don't think. But when you don't know, you think. And when you don't know, you should not be trading. So thinking is the sign that you should not be trading, because if you're thinking, it means you don't know. I know this is a narrow state. I know this is an elephant bar in position 1 in the narrow state. And I know that's a buy. That's how you trade. So we have to stop being. Most people are these hope traders that I have here, trading on hope, trading on thought, getting out because they're scared. Put this away. It's time to put away childish things and move to the other side, the professional trader side, guys, that has rule-based, trade by the numbers, trade by a specific formula, a repeatable process over and over and over again. That's how it's done, through structure, through discipline, and your trading will be unshakable. 92% don't have the knowledge, don't have the foundation, don't have a trading system, approach, formula, or plan. That's why this industry has a 92% failure rate. The 8% of the people that get this are trading by a specific approach. They have a formula that is repeatable over and over and over again. They're trading by some numbered system. It's not by chance. It's not by thought. It's not by feel. This is your roadmap. Now, where you are is right here in this process, guys. You're already right here. I already gave you this. Got this covered. You're following me on YouTube and you got this out of the way. This has got a $300 value here today. Your next step is here, which is lifetime training, education, lifetime with me, study sessions, training sessions, trading live together, forever, no expiration, and funding if you need funding, capital, so that's not your Achilles heel. And yes, you can go to higher levels if you like, but the starting point is there, all right? The complete trader. But here's the problem. Now, most traders never become professional because they think becoming professional is expensive, but it's really not. It used to be. Guys, when I started trading, and I became independent as a trader, I paid $1,500 a month for a chair in a trading operation. They charged what's called a seat fee, right? If I wanted access to the Bloomberg machine, it was an extra $500 a month on top of that. So that's $2,000 a month. My commission rate was $1,500 a trade. $1,500 a trade. Do you understand? So one trade in, one trade out, that's $3,000. You're in the hole. Trading today, becoming a professional, is not expensive. Trading back when I started to become a professional was expensive. No, it's not expensive today. You can do this. The question is, will you? Is it time? I say it's the best time, right? So guys, there are 3 ways to do this, or 3 things that you can choose from. Most people choose the complete trader package to become part of my trading family. This is traders finished with playing small and is ready to really move into professional trading, guys. Not retail-based trading, not individual style, institutional style professional trading. All right. Most people do the complete trading package. But what I've done recently is I've created, this is for life, all right? This is sort of lifetime access, right? Lifetime access to funding, lifetime access to training. There's training all the time, every day, forever, all right? But what I've just done to make it easier for some is I've carved out a 1-year try it out access program. And this allows me to lower the cost of entry because there's a cutoff. See, there's no cutoff here. There's a cutoff here, which allows me to give you the access for 1 year. And that's enough. If you give me 1 year, I can make you professional in your knowledge and your level of sophistication, what you know what to do as a trader, as a successful trader. So this 1 year program allows me to open the doors for you for a smaller cost, if cost is a concern. If it's not, then I strongly encourage the complete trading package. Now, let me show you what that involves here. It's important, right? So the complete trader package is lifetime, all right? You get live study sessions, guys, with me, right? These are the ones with me. You get live study sessions twice a month where I get together with you. We cover your trading. I answer your questions. We figure out what's going wrong in your trading, what mistakes you're making. These study sessions are priceless. All right. But you're being trained every single day of the week. All right. We're just talking about the carved out study sessions with me, but there's training every single day throughout the day, 5 days a week. All right. In this program, you get a 40% payout. You don't have to ever put capital in. You'll be funded starting with $50,000 all the way up to millions of dollars if you get there. Okay. Full manual, lifetime updates to the manual, live trading camp included. This is an 11-week program, guys, with me, where I take you under my personal wing for 11 weeks. That's the live trading camp. That's included. That's very powerful. This alone is worth everything. Okay. 3-day intensive market open mastery. Of course, 10-day live trading Mondays with me. And advanced volatility techniques. Like for when markets are really excessively volatile, a trader has to be able to handle themselves there. And so you get access to the advanced volatility techniques. But this is what the majority of people do. Now, the 1-year access gives you 1 study session per month, 3 days a week access to the daily training and trading, 20% payout should you graduate and begin trading firm capital, and of course, the manual. It doesn't come with everything, but it comes enough with you to know whether this is for you for 1 year. All right? And this is the retail cost. It is not your cost today. This is the value of these programs at the retail level, the outsider's level. Today, I'm considering you not an insider, not an outsider. So you're not going to be offered, you're not going to pay these prices. But these are the regular, normal prices for these programs. For you, I'm going to cut this more than in half for you, these prices here. Now, guys, if you want to read through this, guys, these are real traders. I would say my real traders, some of them show up to these live events that we have. They're right here with you today. Ask them. Ask them if this has not changed their life. Ask them right now. They're right here. Some of them are right here. Not all of them, of course, but some of them are right here listening to us right now. Ask them. If you've identified one of them, ask them if it hasn't changed their life. Ask them. Do it now. Brian says, I knew I had potential, but I lacked the structure. For the first time, I feel like a professional trader. Right? I've closed the market. Mike says, I've closed the market in profit in every single day since 3/20/25. It's crazy. Every day. I'm on the path to real success. Since joining, my trading has exceeded my expectations. It's from Benjamin. And many others can tell you the same thing right here today. Guys, on demand, guys, there are 12 modules to this where it's with me. I'm covering every single aspect of trading. You gain access to this. All right. On demand training, talking about everything from entries to exits to trade management to moving averages to the 14 tradable events, stop methods, stop and reverse tactics and techniques, everything right here covered with you. On demand, you get access to this. 2 live study sessions with me, as I mentioned. Daily live trading, guys. You can't do this without live trading. Guys, this is what's missing. most of these programs are just education training. Somebody showing you a bunch of slides in the back of some Marriott somewhere with stale cookies and warm Coca-Cola Zero, Pepsi Zero in the back or something like that. And they pat you on the back and you go. But the real magic is in the live trading after the training. I need you live trading. I need to see what you're doing. I need to monitor what you're doing. We need to trade together. That's where the real magic comes from. That's every goddamn day, every single day. There's live trading, live breakout study sessions, live instruction, but real live trading every single day together. And of course, for those of you who are looking to also trade firm capital, you will have firm capital available to you. You will have to graduate, of course, by accumulating a $3,000 profit. I showed you trades where traders made $3,000, $5,000, $6,000 in a day yesterday. So you show me the ability to get to $3,000 and you will have access to firm capital. First starting at $500, you will get 40% of the payout. I'm going to give you more than that today, though. Your first goal will be 3,000, and then you can go up the ranks and get access to 100,000, 250,000, 500,000, just by hitting these goals. 6,000, hitting these goals. A portion of which are yours, a portion of which are the firm's. Okay? And no losses. You are under no obligation to pay back any losses. You have to trade through your losses. But if you were to stop trading the firm capital with a negative, the loss is mine, not yours. Right? It's my responsibility to make you profitable. All right. And you get payout on the account. Now, the live trading camp online, guys, this to me is one of the most valuable parts of the complete trading package. This is my baby. You get 11. Did we hey, what's happening?
Oh my gosh, you're
What's
not
happening?
showing the screen?
Am I not showing the screen?
No, just yourself.
Okay, good. I got it. Thank you. So, guys, this is the way a trader moves up the ranks. They graduate from the training program by producing a $3,000 gain. All right. They gain access to the firm account starting at $50,000. They get paid out. I'm going to give you more than this 40%, but that's normally what the payout is. Right. And once these goals are met, 3,000, you move up the ranks in the firm account to 100,000. You hit 6,000, you move up to 250,000, you hit 10,000. Now, this is part your money that you're gaining and part firm capital. But when you get to levels 3 and 4, this is where some serious money can be made. Now, it is my responsibility to make you profitable. So if you were to stop trading the account at some point for whatever reason and the account's at a negative, I consider that my loss. You have under no obligation to pay the loss back in the trading account. If I can't make you profitable, then it's my loss. So I am very greatly incentivized to pour everything that I have in you to train you and teach you properly so that you don't get out there and lose my capital. All right. So, guys, a part of this program is a separate program that lasts 11 weeks. This is with me. This, in my opinion, is one of the most valuable things. So, in the live trading camp, I focus on the first 20 minutes of trading because I am an expert at that. That is what I became sort of famous for off of Wall Street, which was not popular or wasn't even heard of at the time. I became an expert 20-minute trader off the open, when most traders would wait for 30 minutes before trading. There are still traders and trainers who teach that. Don't trade for the first 15 to 30 minutes of trading. See which way the market's going. That was the dominant theme. And I broke that theme and became one of the top traders in my firm, all within the first 20 minutes of trading before most traders even placed a first trade. I became an expert at dominating the most vibrant part of the market day, the first 20 minutes. And I want every single one of my traders to have the 20-minute trading skill. I want you to be able to support yourself your entire life and well, only trading 20 minutes. Now, that doesn't mean that you have to only trade 20 minutes. There are many traders that I train that trade more than 20 minutes, but I don't want them to have to trade more than 20 minutes. I want them to be able to earn their entire livelihood in the first 20 minutes of the day, which is, by the way, the most vibrant. You saw chart after chart Friday, play after play, and it was over a 20-minute period. Boom, 20-minute period. I want you to have that skill. I think it's powerful, because that's what prevents you from turning this into another 9-to-5 job where you're sitting down, staring at a screen all day, getting blurry eyes and a bad bladder because you were scared to go to the bathroom because of your open trades. No, you should be done in 20 minutes. And if you want to trade more, fine. That's what this program does. It focuses on only the first 20 minutes of trading. And it's 11 weeks. You trade with me live for 10 of those weeks till we get this right. It's a very, very powerful, powerful program. So this, in my opinion, is the most valuable part of the complete trader package. It's my baby, and I take you under my wing here. Now, here's your price today. The $8,000 for the complete trader program has gone to this, guys, for life, lifetime with me, a lifetime of training by me, forever, no expiration, every day, study sessions with me multiple times a month, live trading camp, the 20-minute, 11-week trading specialist program. We do this together every day. Now, for the 1-year access, we're talking about the cost of a family dinner, guys, for an entire year. There's no excuse now. If you're serious about it, guys, there are traders who make this in one trade. Do you understand? One trade. You saw them today. It's a drop in the bucket for this. Full funding for life. It's time. It's time to do this the right way, or just don't do it at all. But it's time, guys. It's time. All right? Now, for those of you who do this in the next 72 hours, you got until May 12th here, 72 hours. What I'm going to do is I'm going to give you the 60% of the gains on your trading of the firm capital. So it's normally a 40% payout, because remember, you're putting no capital in ever. You will never have to put capital into a trading account here. But the normal payout is 40%. I'm going to give you 60% to those who really know what they want to do, and you join the program in the next 72 hours, right? I am also going to give you access to the Trading Academy, my academy, which I grow all the time. I'm always adding to this, right? This is a $3,000 product, but it is literally covers all of my techniques, all of my tactics, all of my teachings on virtually every single component of trading. I want you to have lifetime access to that, lifetime, because it's always being added to. That's why you want lifetime access to it. So I'll give you the 60% lifetime access to the academy, right? If you sign up in the next 72 hours, right? Very powerful. You sign up in the next 60 minutes. These are the people I really like to reward. The people who know the state, know the position, know the event, no hesitation, no thinking. I know what opportunity is. Boom! That's you. You're the 60-minute quick action bonus trader. What I'm going to do is I'm going to make sure you get the very best start that you possibly can. And in addition to you having the 60% payout on the firm capital account that you trade, you're the majority partner there. You also get access to the academy, lifetime access. You're going to have a 1-week mentorship with me. This is a $1,500 thing. People pay $1,500 to get mentored. Right? I'm giving this to you. I want you to have the absolute best start of this. You'll be head and shoulders above the rest. That's for anyone who knows that this is for them, who knows that Oliver Velez, I want him as my trading mentor. Would you join us in the next 60 minutes? I am so looking forward to a number of you doing this, to a number of you joining the family. Right? I am passionate about this. I hope that you can see that. I hope that you can feel that. I hope that you can feel that this is something that it's something I have done nothing else with my life except this. And I have this insatiable desire to train you, to give it to you, so we do it together. You know why? Because I can't grab every elephant bar in position 1, but together we can. That's a powerful concept. I can't be at the right place in every single stock, in every single play. But if I train you how to do it, and I know the same way I do it, we spread our money out across the whole market. You have that part of the market. I have this part of the market. You have that part of the market. We don't miss any of them. Every single one of those trades you saw, a group of my traders were in every single one. We didn't miss one of those opportunities. That's powerful. There's power in numbers. There's power in team, in the team approach. That's why I'm so passionate about it. More opportunity is more gain. We can do this together. We do it the right way. Guys, make sure you are only dealing with one of the people on these slides. There are going to be people that try to feign as them. Please be careful. Make sure you're dealing with the right email. Make sure you're dealing with the right WhatsApp number. See the languages that they speak on the side, because everything we do is in English, Spanish, and Portuguese. But please, I want you to be safe. Don't want you getting fooled by the many people who try to pretend like they're one of my advisors. So make sure only the people on this list here, right? You can do this. I know you can. Hundreds and hundreds of others have. And you are the best. There are not many people out there with my pedigree. There are not many people out there with 40 years of experience that are willing to train you every single day. Not many people out there trade live with you for life. Not many people out there who will fund you their own capital, take the losses if you leave with losses. You're in the right place. Let's do this together. Now, look, I know that you could be doing a lot of things with your time, but you're here. That's not something that I take for granted. So I want to thank you for joining me today. I want to thank you for dealing with the technical issues. I apologize about that. I want you to know that I made a promise a long time ago that every single time you give me your attention, you give me your time, every time I'm afforded the opportunity to speak in a mic, on a stage, in a live session to you, I will do my best. I made a promise to myself. I'll do my best to deliver something that I believe can be utilized for the rest of your life. I hope I've done that here today. I believe I've done that here today. If I haven't, I'll get better. Promise. I always get better every single time. I'm looking forward to many of you joining me, guys. All right. Thanks again. All right. For those of you who are going to be joining me, welcome in advance to the family. All right, guys. Ciao for now. Boom. Love you. All right.
The world doesn't belong to those who watch, but to those who dare to enter the arena. Today, you stop being a spectator and become the protagonist. Your moment is now.
I will say this is very, very interesting. It's an historic event. The very first international day trading expo. When I started in this industry 13 years ago, there were no teachers, there were no mentors. I am the author of the best-selling Tools and Tactics for the Master Day Trader. I'm also co-founder of pristine.com, which today is considered to be the premier educational resource for active self-directed traders. It was formed about 7 years ago in my basement apartment with one client. Today, 7 years later, Pristine has a worldwide following of 88,000 that spans over 62 different countries.
Señor Oliver Velez, bienvenido a Colombia de Noticias Caracol y gracias por estar con nosotros. Cuéntenos, por favor, en qué consiste el método Trade for Living que usted creó y que ha sido tan exitoso a nivel mundial.
Vi que uno de los mayores problemas que los corredores de bolsa tenían era la falta de entrenamiento y un monto apropiado de capital. Lo que hice fue crear un programa que se llama Trade for Life, que le permite a los corredores tener continuo entrenamiento cada día con fondos que yo proveo.
If you want to buy off the 200, which I strongly suggest, once you get a green bar at or near the 200, there's your buy and there's your explosion.
We're talking about trading tips today with Oliver Velez.
We've experienced obviously one of the most volatile months in years. I don't believe we've experienced this level of volatility since, 2008, 2009.
At the greatest event of markets and trading in Spain, Oliver Velez, a legend of the trading, the rock star, the messiah of the trading. Do you feel comfortable with this nickname?
I actually do. That, believe it or not, that name, the Messiah of trading, came by the Dow Jones. As Dow Jones calls me the Messiah of trading all the way back in the year 2000.
Mr. Velez has worked 31 years in the market on Wall Street, as you said. He is the teacher, he's a speaker. He also has written 5 best-selling books. It's a lot of work for you. Mr. Velez has worked 31 years in the market on Wall Street, as you said. He is the teacher, he's a speaker. He also has written 5 best-selling books.
When I first started trading, I had certain challenges: lack of training, lack of education, lack of the proper technology, and more importantly, lack of the proper amount of capital. My program provides all of those 4 needs for every single trader.
Live from Orlando, Florida, I'm Adrian Mans for the Money Show Video Network. I'm here today with an old friend of mine, Oliver Velez. I've known you since, 1997. Wow. Back when you were doing some heavy-duty trader education for new guys getting into the business.
I've been training and educating traders since 1994. In 2007, and I was one of the first people in the industry to actually risk my own capital on my students. I've spent the last several years throughout Latin America building a Latin American trading team. And at this particular point, we're about 9,000 traders strong. Wow, worldwide. So, and it's been a long road. It's been busy, but very, very successful.